The promising improvement that we saw in consumer sentiment over the second half of last year has carried into 2025. The deep, widespread pessimism that's dominated for most of the last 2.5 years has lifted. That said, consumers are cautiously pessimistic rather than celebrating at the moment. That picture is also playing through into what we're seeing from our Westpac proprietary data, our Westpac card tracker and Westpac consumer panel, both showing that spending has lifted a little over the second half of last year, but our estimates suggest that for the stage 3 tax cuts, consumers have been very cautious and conservative. Maybe about 25 cents in the dollar of that support actually find its way through to spending. Overall sentiment is just above the 90 level, well above the 80s that we've been seeing for the last couple of years. So a step in the right direction, but not taking off. In fact, from the RBA's point of view, this is almost a Goldilocks result. There would have been some concerns that tax cuts would ignite a consumer spending flurry in the second half of last year. And while there have been some significant points of strength, durable spending during the Black Friday sales, for example, were very strong, the overall spending picture has been more modest, a bit of a Goldilocks story in terms of not too hot, not too cold, not too threatening for the RBA in terms of their inflation trajectory. So the question is, how is this going to play out for 2025? Our January survey was in the field in early January, January 6 to January 9. Since then, we've seen a couple of important developments. The first is locally, the December quarter CPI result, which in our view has cleared the way for the RBA to begin easing interest rates from February. So further relief around cost of living and the wider cost of living issues for the consumer is on its way, and that'll play through more clearly. And the expectations that interest rates would start to move lower have been an important support for sentiment over the last 6 months. So that'll get a little bit more substance, we think, with the February update. Against that, the external backdrop is looking much more unsettled. With the inauguration of US President Trump, we've seen a flurry of activity, the beginning of a serious trade war between the US and its major trading partners. And while Australia is a long way from these issues, we have already seen some sensitivity. Sentiment had a bit of a wobble through December, January after posting strong gains in the previous few months, and February might be where a lot of that starts to land. So how will these tensions between interest rate cuts and external events play out in 2025? It's likely to play out as quite a choppy result. We've seen in the past when we've moved into interest rate easing cycles, they're not straightforward for consumer sentiment. The news is usually positive, but it depends on what's expected from the RBA. At the moment, there's quite a lot expected from the RBA, and even though they're set to move in February, we think they'll take a slower approach towards easing rather than rapid back-to-back moves, and that may offset some of the way that splashes for the consumer. As I said, we've got these external backdrops that are going to become a bit more of a question mark, and I think around consumers there, we'll be interested to see what the February update shows around interest rate expectations, but also inflation expectations. Are global tariff increases expected to see some more problems around inflation, or what's the gut feel as far as the Australian consumer goes? Adding to this picture, we also have a federal election due by the end of May. So all up, it looks like we might be in for a bit of turbulence in the first half of this year. That said, we're unlikely to return to those deeply pessimistic reads that we've seen over the last couple of years. One of the most notable aspects of the updates over the last few months is that when we compare them across subgroups to a year ago, there's been a dramatic change. Basically, 12 months ago, almost every subgroup was deeply pessimistic. Optimists or even cautiously pessimistic subgroups were very few and far between. And that was really a byproduct of the cost of living issue. It was touching every segment in some way, shape or form. Everyone was having to stump up for higher prices. If we roll forward to January, the picture across subgroups is much more dispersed. We're getting some pockets of outright optimism starting to show through very clearly. There's still pessimists in the mix, but it's a much broader range of mood across the consumer. And so I think to get a return to those deeply pessimistic territories, you need something that's uniformly and unanimously seen as a deep negative, and most likely impinging on people's finances directly. And the likelihood of that looks fairly remote, barring some left field escalation in prices and inflation. Doesn't look like we'll see something that would knock us all the way back there. I guess the question is more about the pacing of the recovery that we're seeing. Does the turbulence sort of slow that process in the first half of this year, or do we continue to see a step up? And do consumers remain very conservative, saving the bulk of any improvement in their finances? We think they will be quite conservative, but we'll still see a recovery gaining traction over the course of 2025. We're going to have to keep running the survey though to know exactly what's going on.
The content of this recording is informational and of general nature only, and is not intended to constitute a research report or reflect any recommendation or financial advice. It has been prepared without taking into account your objectives, financial situation, or needs, and investment decisions should not be based on it. You should obtain your own independent advice before proceeding with any investment decision. Whilst every effort has been taken to ensure that the contents are correct and any opinions, forecasts, conclusions are reasonably held based on information at the date of recording, Westpac does not make any representation or warranty as to the accuracy or completeness of the statements or information contained in this recording, and any liability therefore is expressly disclaimed to the extent permitted by law. None of the material included in this recording should be copied, published, or reproduced in whole or in part without the prior written permission of Westpac.